Good morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, January 11th. All right, well, Trump spoke at 11 o'clock Eastern yesterday morning. Market sold off on some of his comments, and then, of course, by the dip, and we rallied into the close. Very muted rally. There wasn't much of a volume behind it. I'm going to show that to you, obviously, in the charts. We're going to look at some money flows again, see where we are, and see what the participation is. But I'm getting a lot of emails about, hey, can you do, cover this stock, that stock. So what I'm going to do is, when I get a majority of emails, I'm going to just kind of, because it's a short video, I'm going to give you two charts of the day that I want you guys to watch out for. And I think that if we do get a continued push higher, or at least momentum to the upside, these are two stocks that I want you to look out for. One for a possible short and one for a possible long. In front of you is Crm Salesforce Com. They're reporting on February 16th, and they had some good bullish comments the last couple of days. Tier 1 firm. You could see the move that it's had already. I mean, so I'm not looking for you guys to chase it. What I am showing you is that we do have some bullish momentum. Let's take a look at our volume. I'm going to blow this up a little bit. As you know, I'm a big fan of that. Above the daily range, okay? This is the yearly, this is the 250 moving average, which is about a year's worth of trading. And this here is now above it from, this is today alone. Very, very good. We had the pullback on low volume. You can see that here, where we just kind of consolidated. And now we had the big move up. So that's telling me and you that that this CRM is being accumulated. Now you can see here our accumulation distribution is now reached above our 50. So it's very, very good coming off of extreme lows. On balance volume is the same. Most importantly, our chalk and money flow starting to uptick here. Money's flowing into the CRM. Same thing with the money flow index. And the force, which is the buying and selling pressure, is actually upticking as well. So this is something that I would want you guys to look for. Again, based on your trading plan, look for a spot on any pullback, more than likely back into the 73, 74 area, which is where I'm looking for some sort of a base, and then take out the swing highs base, and then look for higher prices taking out that 200. Now, we could easily just blow right from there and get back above the 200, which would be a little ideal, if we can get above it and close above it for a couple of days. This is going to now, we have this gap area that we gapped up, and of course we filled the gap already. But watch, because when we get into the 78, 77 and a half, that's going to act as some pretty good resistance area, which is just above the 200. So more than likely, I'd like to see the pullback consolidate. That would build more energy, and then we would shoot much higher. But money is definitely flowing into this based on our chart. Now, technical analysis, you could see here. Okay, so that's something I want to watch out for in the next coming days. Next is our most popular is Apple. Okay, now Apple is no question a cult stock. You could have arguments in Apple about, are they innovating, they're not innovating. I mean, I think personally they're just regurgitating their own products, making it smaller, making it better, making it bigger, better camera. I mean, after a while, yeah, they have a ton of cash. Their cash value comes in about $97, $98. And all day long, I would buy at $97, $98 if I had an opportunity to. Now, here is time cycles, okay? So we are now, if you could see here, at the end or near the end of our time cycles. Okay, we are now overbought. We have a 72.99 reading in RSI, which we're overbought. Overbought is not a sell signal. I just want you to understand that. However, you have to use caution. So what I'm trying to say in this video, I would not be looking to buy Apple here at 118, 119. I'm looking for, if anything, if you're looking for a buy entry, look for a pullback on another higher low from these two previous lows into this triangle uptrend line. Or if you are looking to short Apple, you need a couple of days, couple of down days of consolidation and making lower lows and lower highs. I'm just pointing out that here, let's take a look at money flow. And you can see money flow, yes, has uptick, but look at what's happening here. We're well below our average, our yearly average. That's not a good sign. Yes, accumulation distribution has uptick. That is a good sign. But what disturbs me if I'm looking to hold this and continue to hold it, money flow is not actually coming in as much as it was on the last rise higher. So that to me is disturbing. And our force index, which measures buying selling pressure, has not taken out this previous high, where you would see, and I just want to show you here, where we had the buying pressure here breaking above the 50-day moving average. So that was a no-brainer if you were following Apple. I don't usually follow Apple too much, but I do watch it as, you know, part of my package of indicators and stocks, my bellwether stocks, such as the so-called FANG stocks. But I want you guys to use caution if you're long, and if you're looking to get a short, it's going to need more work. But to me, it's getting a little nervous, and definitely a little long in the tooth for Apple, no question about it. So heads up, those are your 2 charts of the day. Of course, I'll come at you with a couple more charts of the day once I get more people that are interested in a chart of the day, and if I see something really good, I'll make that a chart of the day as well. Next, let's take a look at the advanced decline with volume. Again, that's a huge warning sign. This is one of many of our indicators in our trading model. Has not gone on a sell signal yet, but I believe, based on our trading view here and our technical view, that a downside move is imminent, is absolutely imminent. And I think after the Friday announcement of earnings from the banks, that's probably going to push the Dow up to over 20,000. We'll get more buying in at these highs, and then I think they're going to feel, a lot of these pundits are going to feel a ton of pain. It's just the way it is, guys. It's you know, the markets are made to fool the masses, and if you're not in the know, you're out of the know, right? It's just the way it works, unfortunately. Want to show you something really interesting. A lot of people don't trade treasuries, bonds, and stuff like that, but I want to show you, just to let you know, our producers, our commercials, are net long, okay, treasuries, 10-year treasury notes, bonds. They're long, okay, the instrument, as rates are starting to go, what, a little bit lower, right? We talked about this. So if you're short bonds and notes, just be careful. They usually are right, and when you're coming into an end of a move, you have to use caution, because that's usually generally what happens. They turn to be right. Here's the TLT. Here's the 20-year bond ETF. You could see I'm looking for, at least at a bare minimum, a top of the gap area here, which is about 120. Call it 125-ish, 124.5, 125 to 128. That's going to be the gap fill area, and then I think it's probably going to be a decent short up here at the 20 for lower prices yet again. But again, use caution if you're short the TLT. And also, one thing that I haven't shown you is the VIX, the VIX. Be careful out there shorting this thing, guys. It's the most shorted ever since the instrument has been created. That tells me, with no fear, consumer confidence at 6-year highs, okay, VIX at the extreme lows, and the markets at extreme highs. When you have GDP coming in lower than expected, you have to be careful. I mean, it's just one time the rubber band's going to snap, and the rubber band is very stretched right now. Okay, doesn't mean you can't buy the market if you're day trading, but you have to be careful if you're looking to add to positions. Gold. You know, there's another reason too. Why is treasuries rallying? Why is gold rallying? Why is utility starting to rally, even though we have rates moving lower? It's that fear trade. Excuse me, I lost my train of thought. Even the dollar has rallied of late, so that's a concern. You know, these larger funds and high net worth investors are parking money for safety. I mean, it's just, you got to be careful. All right, gold. Well, we had a nice big move up. I was thinking this may have been a bear flag, but it's a little long in the tooth for this flag at all. So I'm not gonna put it on there. I mentioned it. I'll show it to you guys here again. That's gold. I mean, you know, look, I'll leave it because the flag pole's kind of long. But I think after tomorrow, if we take out the high, I'm going to take it off. It's just going to be an uptrend channel, which would turn basically into an uptrend channel. But I'll give it one more day if we get back down there. But you could see a real nice bounce off the lows. But again, guys, we're not even at 38% retracement from this high to low, retracing back. So it's normal to have a dead cat bounce before one final flush. That's me personally. Now, if we flush back down and make a higher low from this previous low, I think that's even actually a better entry, because at least you solidified the move and confirm that we have made a higher low, and now we're back into moving higher, making higher highs and higher lows, right? Next is going to be GDX, and basically in a holding pattern in a new consolidation area here at 23 to 21.88. That's fine. Nothing wrong with that at all. We are now curling above our proprietary price channel. So if we take out this high of 23.31, then look to get long somewhere. Pick a spot based on your trading plan and look to get long. But if we take out the low of 21.79, I think we see lower prices yet again. Okay, at least one more time. And then we have the spiders. Yeah, we were up a little bit, but we weren't up anything exciting. You got to hear it just all day long. CNBC. Dow 20, oh, we missed it by this, and who cares? It's just a number. It means absolutely nothing. Actually, believe it or not, when you hit that milestone number, usually smart money starts taking profits if they're long. So that's also something to consider too as well. And of course, the inauguration next week, right? IWM, again, guys, the bottom line is 135 to the high of 139. Okay, there's a 4-point range of trading in here. All right, if you do trade it, 135 below, 2 closes below it, we start to get below the proprietary price channels. I'm looking for lower prices, and I will be shorting any rally from there until it has not happened. But let's see if it does happen. We are ready and prepared. Same thing with the Qs here, guys. You could see here we have about 7-8 days straight up, making all new all-time highs. This matches exactly to a T the 2000 crash in the Nasdaq. It's just. It's actually scary how it mimics this, and you got to be careful. I mean, you're talking about technology, and I love technology, and I think some of these tech stocks are way on their way. But Facebook at 126, Apple at all-time highs at 119. You need a pullback. I would not be looking to add for the longer-term guys that are on this video. Short-term players, obviously, you jump in, you jump out, you make your money. So just use caution here on this on technology as well. I'd like to see a pullback back to the mean here, and if we can consolidate here and base a little bit more and then take out that swing highs base, then sure. But look what's happening here. We're below average on our volume. So this is something that I'm just giving you guys a heads up. All right? Have a great day, everybody. We'll see you tomorrow.